March Madness has begun in the markets. We have a lot going on over the next 2.5 weeks, going to dictate the direction in the coming months. We're going to dive into that today. Before we get going, please hit that like button, subscribe to our channel. Nothing we say is financial advice. We are not financial advisors. We are two guys who love talking about the markets, studying them, trying to figure out where we can gain an edge. And that is what we bring to the table. But we do not bring financial advice to the table. Do your own research before making any buys and sells. Kevin, it's been, we didn't do a second show last week. I was at the ETH Denver conference. We can talk about that a little bit if we want, when we get to the crypto side of things. But, the markets were they were up a little bit near the end of the week. Nothing too exciting overall, but I think there's this anticipation over what's to come this week and next week.
Oh yeah, 100%. I think that, we got a lot of data in the past 2 months that conflict this idea of we're in a bull market. And a lot of people are just really uncertain of where the price is going to go. Some people are still just hanging on to this hope that we're in a bull market and this is a bullish trend to the upside. And then a lot of people are maybe just taking some profits off the top. Obviously, I think there's not a lot of money. There's a lot of low volume that we're seeing. So obviously, the price is fluctuating pretty wildly like we saw on Thursday night. But for the most part, I think a lot of people are kind of scared or they're uncertain what's going to happen these next 2 weeks. They know the price is going to go one way or the other. But like I said, the worst thing is always it's going to hit when it's unexpected. And I wouldn't be surprised if something wild, so like some wild card comes out of nowhere in the next 2 weeks that we weren't anticipating.
Anything's possible. How we doing, Ace? Good to see you. Happy that you're here with us. So let's jump into kind of the week ahead and how we think that could impact the markets. So Beginning tomorrow, we have 2 days of Jerome Powell's testifying on Capitol Hill in front of the House and in front of the Senate, kind of giving his biannual report of where things are in the financial markets, how the economy is doing, all of that stuff. I think we will very likely get a strong indication of where the Fed is keeping its attention. We know that, but also how they want to transition moving forward. So I do think that we are going to see, the markets move. When he talks, the markets move, whether it's at, some economic summit or it's in a testimony on Capitol Hill. Like, we are going to see an impact there. We also have quite a few important reports coming up this week. Tomorrow, we get our next consumer credit number. Fun fact, it's going to be ugly because nothing has led us to believe that consumer credit and debt is going to get any better anytime soon because it is a dumpster fire. Student loan payments are going to have to begin again here in June. That is going to get ugly. And then we have the JOLTS report on Wednesday. If you're not aware, that is job openings and labor turnover survey. So we're going to get a little bit better indication of the jobs market. And then the big one on Friday is going to be the unemployment rate. It came in under expectation last time, the lowest reading in decades. And it just once again shows that the job market is way too strong for the Fed to slow down rate hikes. So let me pull up real quick as I'm talking here what the current projections are for the next rate hike, and then we will compare that a week from now based on what Powell says and what these reports say. So CME Group, who we normally go to, this has been moving. It is now 69.4% chance of a 25 basis point hike and a 30.6% chance of 50 basis points. So that is the highest percentage chance of a 50 basis point hike we have seen since the last Fed meeting. If you remember back to after the previous meeting, there was no chance of a 50 basis point hike. They had, there was a chance of no hike whatsoever. And that has been shifting. And I still strongly believe that we are going to see data over the next week and a half come in that is going to move it to where 50 basis points is going to have to be priced in. I'm expecting the markets to take a hit. We are seeing over and over that things are not as strong as they want you to believe. So that is what we're seeing from CME Group around the March 22nd Fed meeting rate decision.
Yeah, I mean, I think that people are starting, like I said, people are starting to realize that maybe everything isn't as great as we were hoping. There's been tons of revisions to data. Like you said, that was pretty much a 0% chance that we were going to get 50 basis points in March. Now it's 30. That's a pretty. I'll take 30% either way. I mean, that's a pretty good jump. But I think a lot of people, the thing that's scary, I think, for the markets in the long term is if they end up doing 25 basis points and then we see that the data isn't great at all. but they just continue with that, I mean, that would be absolutely catastrophic. So I think that'd possibly be the worst case scenario. I think that's worse than 50 basis points. But if we see that the data comes back like maybe neutral, when we see 25 basis points, maybe the markets don't react too much in this month. Again, I'm still waiting for that unexpected, like tons of institutional wallets just moving everything to sell, or just to scare retail investors to the point where they sell. But yeah, so if we get like neutral news, again, I don't think the markets are going to move too much. I think if it's terrible news, that's 25 basis points and bad data, then that's going to see not capitulation, but you're going to see an extremely volatile market going into the end of the month.
Are you going to be listening to Jay Powell the next couple of days?
Maybe. If I don't know what channel was he going to be on, like CNBC or like Bloomberg, maybe.
Or
I have
like
no idea.
I don't know,
Oh,
but I think I'm going to try. I'm going to try to listen as much as I can. I'm interested to know what the politicians are going to be asking him. Like, we know that Elizabeth Warren, oh God, has been constantly saying the Fed needs to slow down rate hikes, and like she is just like out there squawking about with just bad recommendations. And I'm really curious. I would love to see Jerome Powell just like put her in her place, because she just, like, everything that she says when it comes to monetary policy or crypto,
no
it's just so ass backwards. And I would just love to see someone finally put her, like, take her down a peg. But I don't know if that's going to happen. I'm interested to see, what he says around, these upcoming reports. People are asking him, like, if he, to give them a projected, terminal rate, like if he's willing to do that. I have a hard time knowing how he talks and what the Fed's game plan is. I have a hard time seeing him really commit to anything. Like, I think it's going to be a lot of it depends, which is the right approach to take. Like, we're not going to hear him give this number of like, we got to get to this exactly and yada, yada, yada. Like, he is going to go based off of the data that comes in, rightfully so. And at some point, like, the markets are going to have to like get that through their heads, because things are still way too hyped up. Like, we're seeing a little bit of downward movement in the market now, but a lot of these, this rally that we've seen so far this year in the tech sector, it's just overly optimistic. Yeah. And I think that at some point it is going to come to an end, and it could get really ugly. And maybe this is when we see capitulation happen. I hope.
Yeah. It's wild because, I mean, first thing, I think that tech stocks have been insane. Like, well, why are they going up? No reason other than maybe a short squeeze, because we were selling so much into the end of the last year, and people are maybe hoping that we're in a bullish trend. But there's a lot of, I mean, even in the last few weeks, like, everything's been all about AI, right? Like, everything from Chat GPT to NVIDIA talking about AI in their statement. People are just extremely bullish on AI right now, and the greater macro outlook for all this right now. Like, I think Snapchat was also developing some type of AI tool. They're developing it. There's no actual product that they could be using right now that's gonna drive, their product up in price and earn value. So a lot of this right now, I think, is just a huge bubble, and it's going to be a lot of final liquidity of retail investors who are extremely excited about this, new technological development, but they're going to be caught up by people who are smarter and have a lot more money. And I mean smarter in the way of, like, where we are in the greater macro outlook. They're not going to be buying into this. They're going to be selling into the pump. And I think that's what a lot of what's happening right now with the tech stocks. We're going to start seeing some of those just crash hard, because we've seen the Dow like see some negative price action, but the Nasdaq's been pretty strong. So it'll be really interesting to see after this month. And then you said something about, the jobless claims. Like, I haven't seen any layoffs recently. Like, not a lot. It's been very quiet in terms of, job sectors laying anyone off. And again, we added 500,000 new jobs back in January. Nothing's gotten better. If anything, it's gotten worse. And I still anticipate that number just to shoot up. When is it going to happen? I don't know. I wonder if everything's just going to be like the floodgates open and everything just starts bleeding out. And it's like a domino effect, one after the other. But I still anticipate unemployment to like rise nonstop throughout to the end of the year. It'll be really interesting. But right now, it's just like no one's getting laid off. We're seeing the what was it? Not CPI, PCE data coming up higher than anticipated.
Yep.
We saw a spike. Like nothing is adding up here. It's just a matter of time, and it's really just it's insane. But yeah, maybe that's just too much of a rant. But nothing's adding up right now, and I think we need to be staying realistic to what's going to potentially happen. There's a lot of data coming out, but yeah, it's just keeping a cool head. I think a lot of hopium is just out there. I don't see the actual reasoning for it.
Yeah, it's all about expectations in this market, and we're still at that point where the reports that come out, if they come in, above expectations, market gets bad. Under expectations, the expectations are all that matters at this point. So just a quick run through on some of these reports coming out. The JOLTS report on Wednesday, the expectation is 11 million job openings. We'll see. The previous was 11 million job openings. I don't have a median forecast quite yet on that one. For Friday, with the employment rate, we added 517,000 jobs last month. The expectation is 225,000 with an unemployment rate. They're expecting it to remain flat at 3.4%. I mean, if that's the expectation, that's what the market has priced in right now, like a number that came in at a multi-decade low, you would hope maybe comes in a little bit higher, but who the hell knows? Like you can't, I can't anticipate anything at this point. Like
right.
Maybe you would hope that maybe it comes in like 3.5, 3.6 and the market responds positively, but it could come in at 3.2. Like we were expecting 3.6 last time, it came in at 3.4. So anything's possible right now. The market is going to move based on, the expectations versus the outcomes. And it's once again, remaining patient, not getting caught up in FOMO, not panic selling, not buying in if we're not, if the data continues to come in negative, like it's okay. Like we got a long road to hoe, but at the same time, I want to talk about ETH Denver for just a second, because this is my first crypto conference. I am still incredibly bullish on crypto long term. I saw a lot going on with these layer twos. With the one of the themes of the weekend was ZK. So like a ZK roll up. For those who don't know, ZK stands for zero knowledge. Really just trying to make it easier for people to be onboarded to crypto. And we saw the announcement of a new smart contract from the Ethereum Foundation, once again kind of taking down some of the barriers to crypto. And that combined with a lot of these major brands coming in on the L2s has me incredibly bullish, whether it is Polygon, Optimism, Arbitrum. There are so many L2s that are trying to stake their claim and who are doing a lot of work to make transactions significantly cheaper. They're trying to make the process easier as well. Like right now, bridging onto Arbitrum and some of these other L2s is a pain in the ass. And they're aware of that, and they're trying to make it better. So, this conference speaking to a lot of the teams who are running these L2s, very, very excited for what's in store.
Nice. Yeah, long term, I'm still obviously extremely bullish. Like there's a lot of stuff that happened in the last bull run that's just this is going to be huge, especially as we get more adoption. Obviously, ZK is going to be very beneficial in helping people jump on board with a lot of crypto. And, obviously that's the main goal. But yeah, I think that right now we're just in this period of time where we do need to see some setback in the market. We rallied for 10 years. We really did. Bitcoin has been rallying since the beginning of its existence. The markets have been doing pretty damn well since 2009, 2010. So I think we do need to see this reality check push us back to a point where we can potentially be in a position to be healthy again, to put money back in the markets. Right now, there's just too much. And I think a lot of the money that came in from COVID, all that stimulus money, needs to get out of the hands of retail. And again, who's it going to go to? It's going to go to the people who are smart, they have tons of money. They were able to play the market the right way, and they were able to eliminate a lot of that surplus out of the hands of retail. And then retail is just going to be going back to, I guess, not really having much to begin with as they did. So it's really interesting. But again, it's going to offer tons of opportunity for people who are coming in that are doing the right things right now. And yeah, I mean, I know it's not really about ETH Denver, but I am bullish long term on pretty much everything in the crypto space other than Bonk. But yeah, everything looks pretty good for me on this end.
Yeah, they're, the money needs to come out of the hands of retail. It's continuing to, like we've seen savings accounts getting lower, debt getting higher. Like we've mentioned, student debt is going, student loans are going to be turned back on. So the payment of those is going to get really, really ugly. Trying to find the data behind, like, do we know, like offhand, do you happen to know like what the expectation is for like how much a month is paid in student loan debt? 'Cause it has to be an obscene amount of money that has not been accounted for.
No idea. I think I saw somewhere around, obviously I'm looking at the whole student debt, how much is owed. I think it was somewhere in the trillions.
1 point. Okay, I just found it. Payments of, this is from, I can't pronounce it, the Kobeisi letter. Like that's a big Twitter account. Yeah. Maybe some of the few people in the world more bearish than us, Kevin, is these right here. So student loan interest, according to them, in the U.S. will exceed $100 billion per year. That is a lot of money, and that is something that people, I don't think, have allocated towards, and is going to, and what are they going to do when they need to make those payments? Dip into savings. If they're low on savings, if they have risk assets, they're going to sell those risk assets. And we know that, like, a lot of the younger generation who has this high amount of student loan debt, probably a little more forward thinking, a little technologically focused, therefore probably a stronger likelihood they have crypto compared to, stocks. They're going to have to dip into that. Like, I'm not saying it's going to cause it. I don't know what it's going to do to the price of crypto, but if they have to sell something off, it is going to be their crypto, because that is a riskier asset.
Let's be real. If those kids went to college and they have risk assets and they're, say, less than 30 years old, I guarantee you that the price of Doge is going to take a massive hit. For some reason, I just assume that everyone that's in crypto or they talk about crypto, like, oh, if they don't say Bitcoin or they don't say, like, obviously some other thing, I instantly assume it's like, oh yeah, I got Shiba Inu, I got Doge. Maybe that's a little harsh on my end, but for some reason, I feel like those coins are going to take a massive hit. Obviously more than Bitcoin, but yeah, it does not look good for the short term, at least.
Yeah, 100%. Is there anything on the technical side that you want to look at?
I know we had some
crazy liquidations on Bitcoin. Yeah, we can go ahead and pull up the DXY. You know what is doing well, Kevin, that we discussed previously is oil. Oil back over. Oil touched is slightly over 80 a barrel. When you and I talked, yeah, we were talking when it was at 74 and we were going to become oil barons, but I guess that just wasn't in the cards, and it was another correct call that did not get followed through on. So, I guess we get our participation trophy there.
Yeah, don't remind me about that, Joe. It's still, I could be with the Saudis right now, be my oil baron, one of the princes. All right, so I'm gonna pull up something else beforehand. Obviously, I want to talk about Silvergate too, because that's pretty huge. If you don't know what Silvergate is, that was pretty much what caused a huge amount of liquidations in Bitcoin the other day. They were a bank, and they weren't a bank that took deposits, but a lot of exchanges used them. So before you know it, they had $15 billion worth of user deposits, and they decided to invest the money smartly, and they bought treasury bills, and they bought it at the possibly worst time. And it was a point where the interest rates were extremely low. So people obviously are going to try and swap them out. But when FTX happened, people needed their money. They were trying to sell out. They were trying to cash out. So they ended up having to sell those treasury bills at a bit of a loss. And they ended up losing, I think, somewhere in the billions, like maybe it was like $1 or $5 billion. And that caused a huge amount of volatility in the market. And now we see that Silvergate's obviously taking a big hit. So that's just a basic rundown of what happened. You can look into it more, but I just thought that was extremely interesting how FTX is still causing tons of pain in the market. And I do not think that FTX's fallout is over just yet. But let's look at natural gas. I just wanted to look at this real quick. I still think this thing's going to go up. Obviously, we were talking about oil, but we're seeing a bit on the weekly. It's down. The weekly looks like there's still some room to the upside. If we look at the daily, we're probably going to make another correction. But I think that if we look at natural gas long term, this is in a pretty good position to move to the upside. But again, not financial advice. It's just something we're watching. Again, it's very similar to how we were looking at oil the other day. But yeah, I think there's still tons of opportunities in this market if you are bullish in certain areas. But again, you have to play the game in a way where you're anticipating the downfall of something causing the rise of another asset. So commodities, definitely something to be keeping an eye on. Let's go to DXY because the DXY from my show notes is doing exactly what I anticipated, and it is retracing pretty well. So we see on the daily, we're watching this on the daily right here. We wick down to this level of 104 points. What is that? 104.163. Didn't hit the 50-day moving average, that's fine. Probably will hit it at some point as this corrects. But we can see the daily stochastic RSI is coming down pretty fast. Like we're probably being oversold by today or tomorrow. But this is something that you always want to keep an eye on because I always watch out for parallel channels. And I'm seeing one kind of right here. You can go like right here. Maybe we're just trading in this channel right here. Maybe it's easier if we see it in like the 4 hour or something like that. Yeah, see, we're ranging, coming in, tip down here, hit up here, probably going to come down to this, which would be, ironically enough, the 200 moving average on the 4 hourly. Again, does that, and it looks like it has room to the upside. So we'll see where this plays out for the next few days. I do think that over the next few days, we do need to correct, but is that kind of ironic that going into next week where we're getting tons of data this week, that we might be in a position where we can see a pump on the daily? I don't know. That's something that we're definitely going to stay vigilant on. But if we go back to the weekly, we are in the overbought territory finally. Let me get rid of that. We're in the overbought territory finally. Again, we're over here, but as we saw when we were oversold for weeks, like from all the way from October to February, like we said last time. So this could stay overbought for a period of time. We just see the price of the DXY, the value of it just shoot up. Obviously, we want to break this 105.69 resistance level. If we get above that and we're still overbought, obviously we're going to just keep climbing. And that would probably be on the back of a lot of bad financial or economic data or news that comes out. So DXY for me looks like it's in a pretty good position. We're going to see a little bit of retracement over the next few days. We're already seeing that this morning, but I think it's going to be primed to see some positive price action definitely next week, going into the end of this month and then maybe into April.
Okay. Yeah, I was looking at the VIX as well. That is it's too low, man. Like I think
It is.
We're due for a big spike up in the VIX, past the 20s into the 30s. It's not going to happen all at once, but I think that, seeing it at this low of a level with how poor the macro outlook is, like, yeah, I don't short markets because I'm not smart enough to figure that out. I'm going to lose that game, but I'm not optimistic on the coming days, and that the VIX is part of that reason.
Are we bullish on VIX? Should we go to like Walgreens and just buy tons of vapor rub?
Hey, listen, there's been shortages of everything. So, we got eggs back up to like everyone's back to talking about how expensive eggs are. Like maybe this is why, once again, like the CPI data, just like, and then having to constantly, go back and adjust it is just so misleading and so dishonest. And I don't know like when we're going to get the real numbers and when they're going to stick to the real numbers, but man, inflation is bad, and we're for a world of hurt.
like I said, this market is bullshit, and I stand by that 100%. But if we're looking at the VIX, we are hitting this lower trend line right here. Obviously, we're on the weekly. Let's look at the daily. I haven't been watching the VIX too much, but see, we're bouncing right off this thing. It's like hanging out. So I agree. That's extremely low, I think, on the VIX. I think again, the 50-day moving average is right here. If you find some like just bullish, or something crazy happens to the point where, say, inflation comes back at like 8% or something like that. Again, unrealistic. Maybe not. I don't know. We're being lied to everywhere. But point is, numbers come back extremely high. I wouldn't be surprised the S&P, obviously, the volatility shoots down. And we were talking about like that 60 level, like the worst case scenario. I still think that is highly possible.
Yeah, me too.
I'm also like, that was the level I had in my head. And then you said it, and I was like, oh, wow, we're on the same page here. But yeah, I agree. I think that we are due for a massive spike to the upside. When will it happen? I don't know. Probably when everything just starts to catch on fire. But I'm looking at this, and I still think also for the S&P, NASDAQ, and Dow, again, I know not many people agree with me on this, but I think that we're going to revisit the COVID lows. Like, I think that it started with COVID. I think it's going to end with COVID. I think all the money that was in the market after COVID is going to leave, and we're going to be stuck right where we once were. It's a huge amount of support. Maybe it's the worst case scenario. We see that 45% drop, like I was saying. It's not as bad as 2000 or 2008, but it's still enough where obviously we see a retracement. It's going to offer tons of opportunity moving forward. But I think that's where we're heading. That's my bold conviction. I could be dead wrong. Maybe we only do 20, 30%, but I don't know. I think we're due for some massive catalyst that just pushes us over the edge.
It wouldn't surprise me in the least bit, Kevin. Do we want to look at BTC and ETH?
Yeah, let's look at
least BTC.
Okay. Yeah, let's look at Bitcoin. We can take a look at ETH too. I haven't looked at it in a while, so it'll be good to refresh, see everything. So number one thing I want to bring up, because we're looking at the daily, is look at how these volumes are dropping, right? These volumes down here are dropping not pretty fast, but they're dropping pretty significantly over the past few days. Obviously, the weekend's over here, but we saw this huge liquidation here where we were at. Where did we open up? Or what was the height? Get rid of this. The height of this candle was at 23,476, and we went all the way down to 21,971. So we went through the 50-day moving average, and then we almost touched the 200. So that's not necessarily great. I think that was. I mean, to lose that much money, and
you're not the best in the business for nothing, Kev. When it comes to TA, that's the kind of analysis that we've come to expect.
Yeah, I mean, red is bad, but also red is good if you know how to make red green. So I don't know if that's a primary color thing or something. I don't know. I'm just a TA guy. But point is, when we're looking at this, we see that it shot down within 45 minutes, $1,200. That's pretty wild considering how low the volumes were. We just saw a massive spike, and obviously maybe we saw some limits get caught out and people got liquidated and their stop losses got screwed them over a little bit. But the price didn't shoot up that much since. So I think a lot of the market is really scared, especially when we're looking at Bitcoin. I was looking at this before it happened, but for some reason, when I look at the weekly, even in the monthly, I think that since we're overbought, I still thought that there was a good chance we could potentially break up above the 200 EMA and break into this area where, worst case scenario, we just go all the way to 28,809 and we catch some of these wicks that were up here. That would have been terrible. I think over here too, there was some, like this would have been extreme resistance. I thought there was a good chance we could have tapped that one last time and then just get tons more liquidity in the market before it all just shoots straight down. I'm not seeing that necessarily now. I think that the macro is bearish, but I think it's bearish to the point where we might not see that much more liquidity grabbing. I don't think there's a lot more liquidity out there. I think a lot of people have put their money into the market and they're either the cash is either sitting in the asset itself or they're just sitting on the sidelines. And I think the fact that we didn't bounce back up after dropping $1,200 tells me that, we're possibly in a position where the market is going to go down, but it's like the last remnants, like the last dominoes are just set to fall and they haven't yet. So I think that this area that I had marked out here is probably irrelevant. However, I wouldn't be surprised if we do see some more manipulation because we are seeing such low volume in the market. So that's something to keep an eye on. If we look at the weekly, obviously, I think that this 200 EMA is serving as pretty strong resistance. Obviously, if I look back at this, I think 20,000 might be a good area for us to retest. That'd be 20,700, 20,900. That's a realistic area. If we really wanted to get down to, evidence that we are going to be seeing some bearish price action and we're probably going to go down to 14K, we would need to close the monthly either this month or next month under 19.6. And 19.6 we have been talking about since FTX, before FTX. That was a huge level of support. We lost it. We broke above it post FTX. That was into January of this year. It's this green candle, which I don't believe in the slightest bit is natural at all. That was just 100% a bull trap. But I do think that we are going to see this price right here go underneath. And if we go underneath, we have to go find next level support, which is at 14K. Do I think it's going to stop at 14K? No. Just being honest, I think that we're going to go a lot lower. But what level makes sense to me? Again, I was talking about 11.5 to 12.5. That's probably really reasonable. But again, I don't know how bad this is going to play out. The longer this plays out, the worse this is going to get. So obviously we need to see some type of action, both from the Fed, from retail, from just the market itself, finally show signs of, okay, the pain is coming. We need to get this over with, to the point where it's like, okay, we're going to pause, we're going to pivot, and that's probably going to be the sign of a next bull market. But we're not seeing that at all. The Fed raised rates 25 basis points last month, and then we got tons of terrible data. So depending on what they do this month, it will be really interesting to see. But I think right now we're starting to see a little bit of a slowdown in the market. People are anticipating some data coming out. They're scared, not sure what's going to happen, but I don't think the volumes are there right now. And I think people are hoping for the best, but are expecting the worst right now.
Yeah, I mean, I'm expecting the worst, and I'm hoping that we just don't go to zero completely. But if we did, that's just a great buying opportunity. So, who the hell knows? We can check out zero is free. We can check out ETH real quick. That once again at the same time saw a pretty nice red candle. I just looked at it, about 6% drop in a matter of moments with that one, and it's just been chopping sideways ever since. It just seems like things are, we're waiting. We're waiting to see what Powell says, what the data shows, and the movement is going to be purely based around that.
Yeah, I'm looking at this right now. This drop from here to here. Obviously, it broke out of this parallel channel that it was trading it for quite a while. It broke out of it here, broke back up, broke under it, and then right now we're like it's like we're turtling right above the 200 EMA. I think that it's going to fall out, and we're going to see ourselves price action under the 200 EMA. If that's the case, obviously we're going to have to find support somewhere, maybe right around here, 1465. But I think the key support level that really causes price to go up is when we broke this 1338. 1338 was huge resistance for us. We had hit it here, but if we get below this 1338 on the macro, obviously we're going to go down probably to 1083. I've been calling 1083 for the longest, and look at so we're somewhere right around here. I'm like, all right, 1083 is probably going to be the next break. We're trading in a bear flag right here, and then obviously price decided to go up, went massive, shot right up. But I think that probably should have been the next move. Again, market does what the market does, but I think 1083 needs to be retested at some point. Do I think that's going to hold? Absolutely not. I'm still sub 1K ETH. I picked the number 636, but I think anywhere between 600 and 750 ETH is going to be an absolute steal. Will the price be there long? Probably not. I think we're going to see some liquidation prices like Wix just shoot down to that area. And again, I'm talking big picture here. I don't think the market's going to, maybe it does, but I don't think it's realistically going to shoot down that fast. I think it's going to play out over time, and it's going to be when you least expect it that you see, something similar to like FTX, where the red candle just shoots straight down. But it's just something we're going to have to keep an eye on. Obviously, the lower we go, the more opportunity you're going to have. But it's just right now, there's too much. The sentiment right now is still too bullish to the point where people are expecting this rally to go into the summer. I don't think it's going to rally into the summer. I think it's going to fall before then. Again, when? No idea. I'm not the one making the market. I'm just the one following the big money, and the big money is sitting on the sidelines. And anyone who is in the market right now is just chasing liquidity. So this narrative of, everything's going to go up only, it's going to fall apart pretty soon. I just don't see it being long lasting right now. So ETH, looking at you, get below the 200 EMA, you're going to come back down to probably 1338, and that would be over maybe the course of a couple of weeks. But again, not being too overly bearish right now, just looking at the macro, and I think that's the most realistic price level of support from here.
Okay. Yeah. This is your thing. I'll take your word on it. Expecting more hard times ahead, and have cash ready to go. I know that, inflation is still high, and people are like, oh, you can't hold cash during a high inflationary time. Well, if you're expecting things to come, yeah, you sure as shit can. And I'm going to keep doing that. And I think long-term, that is a winning strategy to take. So, keep grinding away, keep stacking cash, wait for that opportunity, because it is coming sooner or later.
No more strip clubs, boys. Keep that singles, fives, everything you got, put it in your pocket, keep it there. It's gonna be you're gonna be grateful when Matic is 30
That's a
cents.
bull. That's a bull market activity. Okay, it's a bull market activity.
Yeah,
We can't be doing that right now, right? Like, come on,
we gotta be
cut
civil.
back.
Be civil men.
Yep. If you're not eating, nothing but dollar hot dogs from Costco to save as much money as possible, then you're not really embracing the market that we're in. So just something to keep in mind. I know Ace has got his copper wire that he's sitting on, waiting for the right moment. Maybe you try storing gasoline in your basement, like in Always Sunny, and you try to sell gasoline door to door to make some extra cash. I'm not sure. Listen, I that's not an area that I can tell you what to do in. Okay, like I said, not financial advice. But that's going to wrap it up for today. Good insights, Kevin, there on the technical side. A lot to look for in the days ahead from a macro standpoint. I'll be glued into C-SPAN watching Jerome Powell talk and try to, him having to deal with the politicians who, know less about the economy than I think my 1-year-old does. So that should be interesting to see how that all goes down.
Yeah, definitely. Well, I mean, your kid's a pretty smart kid, so take it easy on some of these politicians. True. Just kidding. Don't. Never. No false idols. Also, nope. Ace, you said you brought up the Binance situation. Yeah, definitely. Obviously, I don't think any exchange is safe right now, so always be careful where you have your money. Obviously, self-custody is always the best thing. Binance, for the time being, whether it's FUD or not, does not look great. So I'm staying far away from everything, just cash, being safe. So be safe with your funds right now. If you have cash on hand, make sure it's in a place where you can easily access it.
Yep, for sure. That's going to wrap it up. We'll be back Thursday afternoon. We're going to recap everything Jerome Powell said, the reports that we got on Tuesday and Wednesday, kind of looking ahead to how the market has responded and what we see coming on Friday. So that will do it for today. Thank you, everybody, for watching. Once again, please hit that like button, subscribe to our channel. If you like what we have to say, share it out. We love and appreciate every single person who watches our content. It may not always seem like it, but Kevin and I do work very hard on this. So appreciate everybody for being here. We'll be back on Thursday. Have an awesome day, everybody.
Take care, everyone.